Hello, hello. Okay. Mm. Test, test, test. Can you hear me? Hello? Okay, good, good. Thank you. Welcome, welcome. All right. I'll just wait a few more minutes before I start. Meanwhile, I'm gonna adjust the settings of the next session, because since we are looking for the 5-minute orb, then we are interested in the 5-minute time frame and the 9:30 candle. So I'm gonna go to New York, put it to 9:30. Okay, just like that. Let's test. Go to New York. Okay. Hello, hello, bro. How are you doing? Go to New York. Okay, works fine. Perfect. So that's 9:25. That's 9:30. Okay. Now the settings is adjusted and all. I'm gonna be starting and explain the strategy. So just put this full. So what is the strategy? It's a 5-minute orb. But Casper, a guy called Casper SMC, he made just he used the 5-minute orb to create his own strategy based on the orb. He explained, well, the bias is similar to mine, but the entry model is different now. So since we are trading the 5-minute time frame, the 9:30 candle on the 5-minute time frame, okay, you mark the high and the low. Same as the 15. You just treat it as a 15-minute. It's the same. It's just the opening range. It has the opening range of the candle itself. So the 9:30 is your opening range on the 5-minute time frame. If we are above the range, we go for the long. If we are below the range, we go for the shorts. And there's no trades inside of the range. Okay? So his rule is, once there's a candle closure above the range, then you wait for the price to create a fair value gap. Okay? So what is a fair value gap? Fair value gap is basically when there is a gap between 3 candles. Let's say that there's a 1 candle here. Oh, bullish candle, right? 1 candle here and 1 candle here. You guys know what is fair value gap, but I'm just gonna explain it. So here there's a gap. That is, oh sorry, I actually drew it wrong. Let me just do it here better. So it's better for explanation's sake. So when you have 3 candles and then there's a gap in between. So you see that wick here? That wick. There's a gap between this wick and this wick. So that is the fair value gap. Okay? That is this fair value gap. That's a bearish fair value gap. That is a bullish fair value gap here. Okay, etc. I'm not gonna explain fair value gap. I'm gonna assume you guys know what his fair value gap is. So there's a wick here. I'm very bad at drawing, but you got the idea. Anyways, so entry above the range, longs, entry below the range, shorts on the first fair value gap that is shown on the range. So I'm gonna go to the chart and explain the entry model. Where's the stop? Where's the TP? So let's say here that's the first 9:30 candle. That's the high, that's the low, right? That is on the 5-minute time frame. Then you go to the 1-minute time frame. So the entry starts from 9:36 and further, right? So we're gonna move the price action. So here, the price leaves a gap, right? No, it's below the range. Yes, sorry, my bad. So there's no gap. There's no gap. I'm good. I'm good, bro. How you doing? We need similar scenario as this, but below the range to enter the short position. So in this case, there is no fair value gap below the range. There is a fair value gap here behind, right? So that is the gap. So the price breaks above the orb. Let's go and see what's yeah, the last week was really good. So I'm just explaining the Casper SMC strategy. So and welcome, bro, welcome. The price breaks above the range, all right? That's first. So our bias is confirmed. Now our entry, where's our entry? So is there a fair value gap behind? That's a fair value gap, right? Then your entry is gonna be here, and your stop loss is here. Okay, so the candle that breaks above the range, it leaves behind a fair value gap, which is this one. Your stop is gonna be at the last low that the fair value gap created, which is this one here. Vice versa, if you are below. Okay, I'm gonna explain it again. So I'm gonna go back. Let's assume that the price, just for some reason, that yellow line is the orb. So we break above the orb, we still have our entry. Our entry is valid. Why? Because there's a fair value gap here, and your entry is gonna be market order, your stop at the last low that created the fair value gap. Yeah. I've watched a couple of his videos. He made 6 videos, and I think this is still valid because it breaks with displacement above the range. Once it breaks with displacement above the range, it should be fine. I've backtested it. I've watched all of his videos, but like it makes it higher probability because it breaks above the range, so it's still a good idea. But anyways, the price breaks above the range. That is your entry. That is your stop. Risk to reward, and then 0.5%, and you enter. Well, he doesn't go to break even, but I want to go to break even. If it goes 1 hour, which is now, I'm gonna go to break even because why not? Okay, that trade was a break even trade. Yeah, like that, bro. Like you walk with the momentum, right? Like it's a better confirmation. It's a way better confirmation. So in this case, the price went to 1 hour and then stop was a break even. You could have take partials. The trade was maximum. Wait, hold up. It was 1.3 hours. So I'm sure you will be taking some partials here, and then goes back to break even. Okay. So that is the first day, break even day. That is January this year, beginning of this year. Same as the silver bullet strategy, I'm gonna be applying the same concept. So that's the next day, Friday, 9:30 candle, high and low. We go to the 1 minute time frame. All right, so that is our entry right there. Boom, your stop is here. That is a fair value gap. To risk to reward. Oh my god. Don't go to. Oh my god, bro. That's. See, like, I'm gonna make this a TP. I don't accept. You gonna tell me that you're not gonna close the trade here? Like, come on. I'm gonna keep this as a win because that's not fair. That is not fair. That's not a break even trade. I don't accept this. That is a TP. That's it. That should be a TP. Like, because look, my stop is a bit below that low. Like if I make it here, that would be like a 2R. So nah, I'll take this. That's a TP. Because like uh, I don't want to say that like this strategy is bad, it's not as good, but like let's be real here, right? Because I placed my stop a bit low, because like look now, it's 1.97R. Like come on. Like okay, we're humans at the end. Like I'm sure some of people just close here or at 1R, but like what 0.03R? Nah, close it. Don't be greedy, guys. Don't be greedy. Obviously, for backtesting, you could be a bit flexible if there's like minus really close to your TP. You could be flexible, but come on, not like that. That's crazy. Don't be too strict. The the idea here is to prove the concept. Screw the risk to reward. Just prove the concept. Prove that the market goes to your favor if a certain setup happens, or like okay, you have the orb. We are above the orb. The price went to your favor. That means that's good. That's a really good strategy. But 1 2R 3R like 1.2. Nah, come on. That's just don't be too strict on yourself on backtesting, because it will affect your psychology. Just be a bit flexible. Just a bit flexible. Not too flexible, obviously. If the price went to 1 hour, I'll be like, I'm enough. I'm gonna close this. Nah, don't do that. Be real. Right. That is the 9:30 candle. So 1 minute time frame. You have the entry here. That's my stop. Okay. I'm gonna draw the fair value gap. Oops. Casper SMC explains that below the orb, the price needs to create the fair value gap. But some other videos, he explained it somewhere like something, like as a breakout and leaving a gap behind. So I'm just combining both together. I think that's a good combo, and that's more reliable because you walk with the momentum of the trade, right? So that's your stop here. TP to risk to reward. Break even at 1R. Okay, that's a stop loss hit. Okay. We go to the next day. So we take one trade a day. That's a stop loss hit. What happened that day? Oh, look at this. That's so ugly. It stops you out and then went to TP. We mark the high and the low of the 9:30 candle, the 5 minute time frame. Go to the 1 minute. Wait for the break above or below. Okay, here price breaks below, leaves no fair value gap, so we need to wait for the price to leave a fair value gap behind. Okay, that's our entry here. Our stop is gonna be a bit big here, really big actually. Market order, your stop is at this high here. It's a big stop. Yeah, it's ugly. It's an ugly stop. Not a big fan of this, but we're following the rules here. Following the rules. Oof. Alright. That's a stop right there. Go to the next day. So far we are at the break even. Break even so far. What just happened? Let me just refresh Forex reply. Okay, so let me go up, close position. Okay, good. There's the next day. Oh, there was probably a bank holiday or something here. There's no trading day because the session ended at 18. Okay, that's a 9:30 candle. Mark the high and the low. We go to the 1 minute time frame, and then we wait for a break below or above. Okay, so that's our entry right there. That's our entry. Price leaves a fair value gap behind. That is your stop. And that is your fair value gap. Targeting risk to reward. Okay, 1 hour. Okay, stop loss a break even. And TP hit. Lovely. That's a clean trade. It's a that entry model is a bit weird to me. Because sometimes your stop will be very small and sometimes will be very big. And like it's not a it's a bit weird, you know. It's a bit weird. So let's see. I will. Okay, so that's your entry right there. Boom. Your stop is here. Targeting 2 risk to reward. The price hit 1 hour. I forgot to adjust it. Yeah, it hit 1 hour. That's a break even. Ooh, okay. Price hits break even. Let's see. Oh, okay. Break even saves lives. So that's a break even trade. You could have taken partials and just save yourself. Yeah. I mean, well, it is what it is. Well, we cannot do anything about it, unfortunately. It is what it is. I just don't like trading on Nasdaq with more than 60 or 70 point stop. Like even 60 is a lot. It's very a lot. Recently this year the volatility is very high. So the price here breaks below but leaves no fair value gap behind, so there's no entry. Here it leaves a gap but price breaks above in the range. Yeah, I do take 50%. When I trade live I take 50% always. At 1 hour I take 50%. Always. Okay. So that is the entry. That is your stop. Targeting 2 risk to reward. I forgot to change the settings, so I'm gonna have to do this for the 1 hour. Okay, that's 1 hour. Stop loss to break even. And TP hit. Lovely. So far we are up. I forgot how much I'm risking. 2 hour. We are up 2 hour. Yeah, I'm risking 0.5%. So far, any questions, guys? Do you understand the rules here? I think the rules are very simple. Is there any question? Please, if there's something confusing, just stop me and I will explain it again. But I think it's very easy. Anything orb related should be very easy. Just never trade inside the orb. Okay. The price. That is your stop. There's a gap. For R. No, 2 point something. 2 point something, I guess. I forgot to change the 1 hour again, man. Okay, that's a 1 hour. The auto break even thing. Okay, that's a break even. Here, stop loss a break even. Let's see. To risk reward, that's a break even trade. We go to the next day. Notice all of the break even trades. Put in mind you can take partials, so you can always secure profit. So far we have 1, 2, 3 break even trades, 2 losing trades, and 3 winning trades. Okay, good. That is the 930 high and low, 1 minute time frame. Right, price breaks below, leaving no gap behind. No gap. That's your entry right there. See, like that's what I mean when where your stop is very small. That's your stop. Oh wait, nope. Sorry, the entry is on the next candle. No, what am I saying? That's your stop. Sorry. So that's the gap. That's your stop here. It just seems wrong to me. Like I'm gonna get stopped instantly. I don't like. See the stop. I don't like it. I think the stop needs to be better. That's unfair. The stop is too small. That's one of the scenarios that I don't like about this stop, is that your stop sometimes gonna be very small, and NQ is always highly volatile. Having a tight stop will just cook you. What happened that day? It's just choppy day. New York. Okay. That's the high and low. 1 minute time frame. Well, here, that's a very big stop. That is a last fair value gap. That is stop here. That's the gap. That is the high that created the gap. Risking 2 risk to reward. Auto break even at 1 hour. Let's go. That's good. Oh, it did not hit 1 hour. Okay, now it hit 1 hour. Oh, lovely. Hits TP. That's good. So the price there, the price breaks below, retested the gap, and then clean trade. Very clean trade. You could do something, guys, just to adjust your rules. Having like you don't need to follow the strategy as is. Obviously, let's see. So far the results are good actually. January is good. It's not bad. Not bad. You could just do a limit order on the gap if you want to. I'm not a big fan of it, but that will help you secure a faster TP hit. A faster TP hit. Majority of the times, but sometimes the price just live without it. I just leave you alone and go. Yeah, so far it's good. Way better than the silver bullet. Silver bullet was actually miserable. Was miserable. Let's see. High and low. I win with many points. Yeah, it's good. It's good, bro. So far it is actually good. So okay, that's your entry. Wait, is there a gap? Yeah, there is a gap. Let me just go back because my entry is below. There's a small gap here. A gap is a gap. That is a gap. So your entry is here. Your stop is at this low. 2 risk to reward. I forgot to place the auto break even. Alright. Auto break even. That's a break even trade. We go to the next day. Mark the high and low. Very interesting result actually. That's really good. So far it's good. It gives hope. There is no gap whatsoever, so there's no entry. Okay, that's your entry here. There's a gap. That's your entry. Your stop is here. Risking 2 to risk to reward. Boom. I forgot to put that 1 hour again. Okay, that's a stop. We got stopped. So far we are up to 2.3 RR or something like that. Not sure. That's the high and low. All right. we did break below, but there is no gap. Yeah, that's the entry. Here, there's a small gap. That's the gap. Your stop is here. To risk to reward. To 1 hour move to break even. That's a break even. And the break even hit. There's a lot of break evens in this strategy. So far this indicates maybe go for 1-to-1 and just be happy. But let's see, once we end the month, we analyze and check. But there's a lot of break-even trades. Wait, that's not 9:30. 9:30. 1 minute. There's no gap. That's the entry. Market order. Stop is here. To risk to reward. Auto break-even 1. Stops at break-even. Hits 1 hour. See, that's another break-even trade. So that means, like, so far what I could tell is that this strategy works very well with 1 hour only, not 2 hour. 1 hour is you'll have very high win rate. So at 1 hour, just make sure you risk higher. You know, if you want to be satisfied with the profit, just risk high, and then you're fine. That's the entry. Stop. To risk to reward. Auto break even at 1 hour. Alright, this is very choppy. Let's see other. Okay, that day is very choppy. I think that's FOMC day, if I'm not mistaken. Yep. As expected, I do not trade this day whatsoever. There's Fed interest rate, FOMC press conference. So, well, I'm just following rules here without any news or anything like that. But I would never trade FOMC because look, the price is always choppy. So this trade could be avoided if you skip FOMC days. Next day. High and low. We break below the range. That is my entry ready for me. So stop. Okay. Alright, that's a stop. Next day. Yeah, I just I don't know, for backtesting I'm not removing anything. I'm just gonna prove the concept. I mean, for my backtesting, my strategy I would remove, but like I'm just doing full data on the first 3 months, and then it's up to you how to just change the rules. I don't want to change anything. Is this your first backtest for this strategy? Yes, that's the first time, but I did tape reading. Tape reading was okay. Like it was okay. Like I could have seen a lot of I've seen a lot of break evens. So this just tells me that that's a 1 hour strategy. With 1 hour you can go with a very high win rate. Very high win rate. So just increase your risk and you should be fine. But Timo, I've done the silver, so that's my second strat. Just to answer your question properly, that is my first time backtesting the 5-minute orb for Casper SMC. But that's the second strategy I'm backtesting in the playlist. The first strategy was Silver Bullet, which I finished last week. And there's obviously my own strategy, which I backtested the entire year, 2023. You can find it on the playlist. Okay, that's the entry. That's your stop. See, again, the stop is very small here. But I love Fridays. Fridays are generally bullish the majority of the time. Oh, that's not break even yet. Now it's break even. Oh, that's TP hit. Clean. That's a clean trade. Yeah, like Fridays, so just small tip. Whenever you see on Friday a price closes with displacement above the range, that means we're gonna be we're gonna just be bullish for the the rest of the day. Yep, as expected. Gonna be bullish at the PM session. We're gonna retrace and then go all the way back. It's classic Friday. Classic Friday. And just like that, we you think your orb? I just so look. See, that's there is no best strategy. It's just obviously I'm biased. I would say mine is better, but let's put this thing in mind. Casper SMC, he just used the orb terminology or the method. Like me, I used 15 minute, he used 5 minute, and then he added his own rules, and then he traded. So me, I just took the 15 minute because I believe the 9:30 until 9:45, this range is a bit noisy. The price action is, there's a lot of noise. I think trading within this window of like 15 minutes, it's a bit risky. There's very high volatility. The volatility might be to your favor or against you, or it might chop you around, right? And then once the 10 a.m. hit, boom, you're gonna get stopped. But it's good. The strategy, it looks good so far. So January was finished. What time is it? Well, it's 5:30, so we still have 30 more minutes. I'm gonna finish the session and then try to analyze. But so far, we just ended the month at 2.2 R, something like that, which is really good. So that's very good. And we had a lot of break-even trades. So if you are going for 1-to-1, you'd be up, I don't know, 6-7%. I guess 5%, 6%, around that. But yeah, so the orb that I use, bro, I just made my own rules, very strict rules, and I'm following it. It's just about what rules fits you the best. Like now I'm doing something a bit different than what I'm doing, just because of this year it showed a weird price action, so I'm trying to adapt. But I'm still following my rules. 15 minute above the range long, below the range shorts, etc. So that is your entry. That's your stop. At the end of the day, it all goes down to your risk management, right? So I trade one trade a day, so I could make that's 1 hour hit, by the way. I don't know why. Okay, it went to break even. Yeah, so it all comes down to your risk management. If you can make a 20% win rate strategy, look, 45% win rate, because you are trading less, you know. So yeah, I just trade one trade a day, and I'm happy. Break even, I log out. TP, I log out. Stop loss, I log out. I'm happy. Recently, I'm just not when it hits break even, I'm just closing my chart, because if I'm wrong about the trade and stops my break even, well, it might go to TP, but the majority of the times it will hit my break even, and then if I re-enter again, I'm gonna get stopped. My bias is wrong. So at 1 hour, I secure profits and then I leave. At the end of the day, we are scalping, so take whatever the market gives you, or just small money. Ooh, this is a very interesting Yeah, that's a very tight stop. 10-point stop on NQ. Just wow. Let's see. Very close TP, very small stop. Oof. Uh, um, probably in a month. In a month. But by the way, I'm not doing mentorship. I'm just like trading live in front of everyone on Discord. Trading live. I just want to trade 1 month alone because I'm refining my edge, and I don't want anyone to, if I get stopped, like I don't want anyone to enter a trade when I'm actually trying. I don't want anyone to lose their money over me trying to forward test, enhance the strategy. It's not fair. Like it's not fair. So it is a weird trade, yeah. Well, you're gonna get stopped anyways. Yeah. So once I finish this 1 month, I'm gonna think. Shall I go live or just do mentorship and just I don't know. I need to think after the because I traded live for 3 months. It was cool, but I've noticed something. I don't feel pressured, but there is a guilt feeling. Like if I'm losing a trade, okay, I'm happy. I'm losing the trade. I know my psychology, and I accept me losing the trade. But I don't know about you guys. You're entering with me, uh, and then you might just go just mental and revenge trade and what you might blow an account because my trade did not work, and this kind of make me feel really guilty. Like I realized that, so I don't want anyone to lose because I entered a trade. I'm let me just see how this month end, and then I will decide whether I'm gonna open the live or just do mentorship. Just mentorship. I don't mind because I hate this guilt. It eats me like because I had 2 months of bad price action, wasn't to my favor. Is so I was damaged, and people who joined my Discord also were damaged. Like it's kind of I feel guilty about it. It's not a good feeling. Not gonna lie, it's not a good feeling. I don't like it. So I will see how will this month end. I will see how. But most likely, maybe I'm not gonna do live. I'm gonna do something different. We'll see. We'll see. I still have 1 month to think. If you guys have any ideas, please let me know. 1R. Come on. Oof. It's very sad. Alright, next day. One-minute time frame. Close above the range. There is no gap. Oh, there's no gap. Okay, that's the entry right there. That's your entry. Your stop is big again. 86 point. Oh my god. And then to risk to reward. To break even at 1 hour. Okay, stop loss to break even. Come on, hit TP. Let's go. Okay, good. Next day. Oh, what time is it? Yeah, I still have 15 more minutes, and then we'll just do the analytics section. I just want to finish this strategy in 2 sessions, so that it just you won't get bored. So that's your entry right away. Stop is here. No, your stop is that a gap? Yeah, that's a gap. So your stop is here. Tourist reward. Auto break even at 1 hour. what happened? Okay. Alright, price went to 1R, and then stop us a break even. It barely stops us out, barely. Okay. So we are middle of February. Okay. Price breaks above the range, leaves. Oh, there is a gap. No, there's no gap. Yeah, that's the gap, but I don't like this trade. Very small stop loss, and that's a CPI day. So we are in a big 15-minute fair value gap. It's a bit risky for the longs. Whoa, never mind. It is full TP. Damn, that's a clean trade. Yeah, that's what I mean. This deep retracement because of a 15-minute fair value gap. But follow the rules, hits TP. So far, actually, the results are really impressive. What happened? Yeah, let me just refresh this. It's a bug. Right. 5-minute orb. That's 9:30 candle. Alright, that's your entry. That's the gap. That's your entry right there. Tourist reward. And we get stopped. Next day. It's a very interesting entry model, I'm not gonna lie. You could just wait for the price to create a swing and just place your stop at the swing. I love placing my stop at the swing, to be honest. It's my favorite. There is no gap. Okay, that's the entry here. There's a small gap here, very small. Stop is here. Tourist reward, auto break even one. Oh, stop was a break even. Ah, that's crazy, man. Yeah, but that's 1.8 hours, so yeah, it just hits 1.8 hour and stops you out. Damn. Break even trade. 18 February, right? High and low. Oh no, that's 9:25 candle. That's a 9:30. 1 minute. That is your entry. Right at the break, because there's a fair value gap behind. Your stop. Tourist reward. Auto break even 1 hour. Stop was a break even. TP hit. Very nice. I think we can be able to finish this session here. We still have 15 more minutes, 10 more minutes. We are end of February. Okay, let's just end February here. That's your stop. That's your entry. That's your stop. Stop was tourist reward. To break even at 1 hour. Stop loss hit. Is that FOMC meeting minutes? Yes, it is. So this day could have been avoided. I don't trade anything that is FOMC related. So I'm just pointing out the days where you got stopped, and you could avoid it by not trading when you see FOMC. Alright, that's the entry here. Stop loss is there. Risking to risk to reward. Boom. I mean, nothing, I gotta lie, this is so good. This is really, so far the results are amazing actually. Yeah, bro, just when you see FOMC, just run away, man. I swear to God. I realized this 3 months of forward testing. I'm like, I'm always getting, I just look back to my journal and I see whenever I trade Wednesday and there's FOMC, I'm getting stopped. I'm like, you know what? I'm not trading Wednesdays. That's the hack. Don't trade Wednesdays. Is that a gap? Yo, that's a gap though. That is a gap. So that's your entry right there. Your stop is here. Yeah, bro. FOMCs are just terrible. I never trade them. I realized that in December when I was trading, last year. I'm like, my Wednesdays are I'm just losing. I don't know why. I mean, the FOMC days, I didn't know about it. I'm like, okay, then I'm just gonna stop trading these. Look at this. It's really good. Yeah, I do have on Mondays, but now, yeah, well, Mondays. So Mondays are 50-50, are 50%. So that means 50% win rate. It means 50% of the times the price action is gonna be clean as Tuesday, Wednesday, or Thursday or Friday, and 50% of the time is gonna be very miserable, choppy, as if you have FOMC, NFP, CPI the same day. It's just disgusting. The other days are high on win rate for me, but now because I'm doing something actually is really clean on the orb, refining some few stuff, which makes me reconsider trading Mondays. I managed to make my Mondays 60% win rate, so I could trade on Mondays. But it's always good to have less trading days. To be honest, it means you're less. You have less exposure to the market. But when you see your setup on Monday on a clean price action, why the heck not? But based on the strategy that I explained on YouTube, mine, the ORB IFVG, Mondays are miserable. Don't trade Mondays. Because IFVG, when you trade IFVG, you're waiting for the price to retrace back up, and then and then enter on the inversion. So that retracement on Mondays, it will be a bit choppy. No, bro, I hate discretion. No, everything is mechanical. Everything is mechanical. I don't like discretion. My only discretion back then was for the reversals. But now I'm not doing reversals anymore. No more reversals. Just with the direction of the orb. No more reversals. Mechanical is so easy, bro. Like even when you, wow, that's crazy. Even when you journal, you know what to journal, right? Like you will learn. But when you trade discretion, you'll be like, so I entered because journaling is very important, right? Journaling is very important. When you journal, you wanna explain how you feel. Why did you lose? I lost because the price action tapped into 4 hour, but at the 2 hours time frame there was a mitigation block, and then at the 1 hour there's a rejection block. You're taking too many things into consideration, right? It's just a bit confusing. But when it's mechanical, okay, I followed my rules, and then you can note on a side. I followed my rules. I got stopped because my entry was next to a key level. That key level, you choose what you want it to be. Don't choose every key level in the world. Just pick a specific key level, whether high of London, previous daily high, previous daily low, order blocks, mitigation block, break, whatever. Just choose one. Don't overwhelm yourself. And you know that makes it easier for you to read price action, and easier for you to journal. For me, when I journal, I only use London high, London low, Tokyo high, Tokyo low, and previous daily high, previous daily low. That's it. I don't use anything else. So when I get stopped, I want to see when I enter the trade, did we sweep any of those? Did I enter exactly on the sweep, or I entered when the price swept already? You know, like this way, it's easier to analyze your trade. If you want to be a bit discretion in the future, you will see a good trade, mechanical trade, but because of your journal, you've seen that when you enter a trade and the price swept London high, you're going longs, the probability is less because the price just swept London high. It needs to retrace or maybe reverse, and you are already in a long trade. That's how I journal. That's how I do things, and that's how I actually learned. So journal is very important. Journaling is very important. Okay, we're almost done, by the way, from February, which is really good. That's your entry here. Oops. For 1 second, I thought I was getting hacked. Alright, I got stopped instantly. Wow, in one candle. Alright, that will mess with your psychology 100%. You just entered. You don't have just a minute to breathe. You have 1 minute to breathe, and then boom, you're gonna get stopped. Yeah, I've seen this in the live. I've experienced it. This day will come. You have to be ready. You're not gonna feel well. You have to be disciplined enough to close the chart and then come back again tomorrow. Because that was a very fast stop. Very fast stop. Yeah, that's the entry right there. Your stop is here. No, actually, wait, my bad. Your stop is here. Holy stop is so small. Because that's the last candle was created before the fair value gap. Ugh. Yeah. Well, imagine if your stop was here at the last swing. That's 2R right there. But anyways, all right. So we're done with February and January. Let's see the analytics section. It's gonna be interesting. 48% win rate so far. 33 trades, 12 winning trades, 13 losing trades, 8 break even. So just count with me here. So you have 13 losing days, 12 winning days, just 12 plus 8. If you're going for 1-to-1, okay? 1-to-1, you have 20 trades and 13 losses. If the 1R doesn't satisfy you, just go for 50% at 1R partials, and then you should be fine. So far, we ended January 1.95, made $974, risking 0.5% of 50,000 account balance. February, we made 1,700, which is 3.4%. That's very impressive, actually. That's very good. But my take on this, I would go for 1-to-1 only. 1-to-1 is a sweet spot. You would just you're risking 250 to get 2 Rs. That's like what, $500. Then just risk $500 if you're willing. Obviously, you need to understand how many consecutive losses that this strategy have, right? Because if you are risking very high, the consecutive losses on a high risk might damage you. Like here so far we have 3 consecutive losses and 3 consecutive wins. So if you want to risk higher, that means you're gonna have 3 days big losing trades. So you choose the amount of dollars you want to risk that fits your taste and your psychology, and then go for 1-to-1. That's a 1-to-1 strategy. Well, even 1-to-2, it's good. It's still good results. Like, don't get me wrong. Anything below 40%, well, I cannot judge yet because I need to have at least 300, 400 trades to understand the winner of the strategy. That's only 33. It's not enough to judge. But the equity curve is interesting. It's good. It's slowly going up, which is really good. Yeah, that strategy is way more promising than Silver Bullet. I'm kind of interested how March is, because March was my best month this year. So maybe next session we'll see how this March is gonna be. But so far that'll be it for me, guys. If you have any questions, please let me know. My result of the ORB. I had 2% January, 3% I got 3% February, 5% in March. 5 or maybe 6, I forgot. But March how I see it, in January I did 1 payout, February 1 payout, March I did 2 payout, and beginning of April I did my second payout, because in March I win a lot. I had only 2 losing days, 2 red days. If I recall correctly, 2 red days probably in March. It was really clean month. I had like 10 win streaks. It was a bit overwhelming for me. It was a bit overwhelming to the point that after my 6 win streak, I reduced my risk. I was ready because I wanted to lose. I was ready for the loss. And then yeah. But that'll be it. That's a really good strategy so far. Really good. As usual, I just take the strategies that are out there. I just tweak them a little bit. Casper would do something different. He waits for the price above the range to form the fair value gap, and then enter. I did not do that. I just wait for the price to break above. If that candle left fair value gap behind, that's my entry. So that you'll be with the momentum with the orb. That's really good. My backtest was 1-to-2. My live is 1-to-1, 1.5 R. Sometimes I go to 2 R if I see my dolt correctly. Like if I see how if the price is easy to read, I let the price fly. But otherwise, I would place my TP at the nearest external liquidity. You know, because in backtesting it's easy to be cold-blooded, but in live, you want to make money, right? Yeah, that's true. That's true. 2 stop loss removed, so that'll be positive win rate. So yeah, in live, bro, coming back to your question, in live, you want to make money. You just want to. We are scalpers. Even 0.8 R is good. So 1 R is really good for me. But I just place my TPs at a place like at a key level, which I told you, London lows, Tokyo lows, previous high and lows, you know, or sometimes 1 hour external liquidity, that's my discretion. My TPs are actually discretionary, right? But my entries are mechanical. So if my price goes to that level that I wanted to, that I think the price is going to, or it's attracted to be there, that is my RR. So my RR could be, it's a bit fluctuated, but it never goes above 2R. Sometimes I go to 3R if I believe the price going there, yeah, but that's very low percentage. Like the max I got was 5R. It was in March. It's only 1 day. It was beautiful. It was Friday. Just price went. I took 80% off and then left 20% running. But backtesting, you have to just prove the concept, right? The concept is proven, good. Just then You could trade, you could trade exactly as a backtest. That's what I did the first 2 months, and then I realized I could get out earlier than like I could leave the chart early. Sitting on the chart for too much is a bit stressful. It's not healthy. Backtesting is very easy. Just clicking buttons and the price is moving, right? Yeah, I just finished 60 days in front of you within 1 hour. That 1 hour probably you'd be sitting on the chart waiting for the price to hit your stop loss or your TP like that. Psychologically, it's a bit, it's different, right? It's way different. So one to one, I really recommend this. No problem, bro. No problem. I appreciate it, man. I'm just sharing my experience here. Trading is fun. Really easy way to make hard. It's hard way to make easy money. I don't know the term. That term. I think you got it. Yeah, it requires effort, and I love teaching. I love sharing my experience, man. All right, guys. I hope you have a good day. I'll see you next Sunday. We'll be ending this strategy. Really good strategy so far, and we'll start with a new strategy. That's supply and demand. Something really interesting. It's one of the first forex strategies I tried. It was really good. It's really good. I hope you will like it. But for now, that'll be it. Thank you very much.